So, Joseph, former market darling, Standard Chartered, the emerging market kings, as it were, and banking, the stock is on its knees, 5-year lows, more news about changing the strategy, moving away from the growth thing. Isn't it all in the price? Are we not printing the bottom here?
Oh, I like that contrarian take, Alan. Yeah, the shares are just above 12 quid. They peaked in March last year at 18 quid. So there's been quite a fall. And on a price to book basis, it's trading about 1 times. You know, the comparison I always make is to Lloyd's, which is this UK only mortgage bank, and that's on like 1.3 times. So that's a weird world we live in, where an EM focused bank is trading at a discount like that. But as you mentioned, it seems to be the end of expansion for StanChart, but you have to look at the last 5 years were really rapid expansion. This is a bank which has gone from about $400 billion of assets in 2008 to like 670 billion now, and you have to know, if you're going to get into the stock now, what is the credit exposure there if those emerging markets slow down, if there's a Chinese downturn.
Okay, so let's just look at some numbers, basic numbers. As I understand it, return on equity, roughly 11% now.
Yeah, it's pretty good.
11%, and what did you say, loan growth at around 8%?
Well, I mean, like corporate balances last year were about 8% growth.
Right.
Which is, not bad.
That's sustainable,
but,
I think, at that kind of ROE. I don't think that's too bad.
Yeah, true. The regions in which they operate are more like kind of 2%. But again, it comes to, well, what do you get further down the line in terms of impairment? I mean, the coverage ratio for impaired loans is 46%. Last year, in 2007, it was 91% for Standard Chartered, so there's been some deterioration there. Now, you could say that's mitigated because in that time they've probably been holding more collateral against lending, but it's still not wholly reassuring.
Okay, but where does Standard Chartered now sit relative to its regional neighbors, its competition in the region?
Yeah, because I mean, you could argue, well, any Asian bank is going to have sort of credit issues if the whole region goes into a downturn. But many of the other fast-growing banks in the last 5 years have been national champions. If you look at ICBC, DBS in Singapore, OCBC and so on, they've grown, over the last 5 years, like loans by sort of like 20 to 30%. Much more than in their home markets. So they're regionalising quite a bit, and they're national champions. Right. So you could say, well, that governments stand behind them. StanChart, by comparison, looks a bit stateless, which is maybe also its strength. If you want an inter-regional trade finance monster, really, then sure, buy StanChart from here, and it may look cheap, but you have to be aware, it's basically competing against a set of expanding national champions as well.
Okay. It's really interesting. Thanks, Joseph.